When it comes to investing, I've waited probably 20 years to be able to show you what I'm about to show you now. And the reason it's taken so long to share with you hedge fund manager ideas which are digestible by the private investor is because up till now, getting hold of the data has been difficult. But not only that, we've been busy doing other things. So now I've got a bigger team who can collect the data and a graphics team who can put it together. I'm going to show you what we're going to start offering people. Now remember, all investing is risky. Your capital is always at risk. There is no guarantee that past performance will lead to future gains. But this is what we're going to start showing people. We're going to go through hedge funds, which have returned 40% per annum for at least the last 3 years, because it annoys me that private investors don't have access to the best brains. Now, I launched my fund in 2004, but we're looking for ones which have returned 40% per annum for at least the last 3 years. Not only that, over $1 billion of assets under management. That's more than I've got. So I wouldn't even qualify for this. Over $1 billion of assets under management. The hedge fund must hold at least 5% of its funds in the stocks that we're going to look at. A 40% return must be a reasonable projection for the next 12 months of one of the stocks they hold, and I'll show you an example in a second. My usual Great Investments Program exit rules apply, and they meet other Great Investment Program rules. The momentum's oversold, value, growth, income, 7, 8, 9, or 10. So I'm going to show you an example. I'm going to start offering these now. And remember, this isn't individual advice. Capital is at risk when you're investing, so this isn't a solicitation to go and buy something. And I'll give you an example of the kinds of companies we're looking at. Okay, so this is a $1.4 billion hedge fund. Average return 53% per annum on average over the last 3 years. Yes, with extreme volatility to the upside and the down. The orange one is the hedge fund. Blue is the S&P. So it's blown the S&P out of the water, 53.31%. Wouldn't you love that in your pension? Okay. And here's the thing. That's what's over the last 3 years. Actually, if you look over a longer period of time, you can see that you've done incredibly well. So we're going to look at the stocks where they've got more than 5% holding. So they've got some conviction behind them, right? I'm going to give an example in just a second. Here's another one. This is 4.5 billion. Okay. Their return, 52% per annum over the last 3 years. Okay. And that's them. Right, so you can see, blows the S&P out of the water once again, right? Massive returns. However, you can't just get a time machine, go back in time and buy what they had back then because it's too late. How do you know whether to hold what they've already got? So we're going to use our Great Investment Program rules, and we're going to start offering this to people and saying, right, does it meet value, growth, income, cash flow, Sortino, momentum, alpha today in terms of what they're holding? And do they continue having the conviction of the companies that they continue to hold? I'll give you an example. And what we'll do with these is we'll create them into what we call special situations and non-Great Investments Program trades. In other words, reward at least 40% is reasonable on the trajectory that it's already shown. Okay, and we're also looking at value, growth, income, cash flow, Sortino, alpha. We've done a whole ton of fundamental research. My own proprietary algorithm looking at value, growth, income, cash flow, and this is a 7 out of 10. We're going to mark where the stop loss should be. And the reward has to be multiple to the risk, so you know exactly where your risk is, and it's fixed. You don't have to keep looking at it. You can put the exit in. You can see where the reward is. You can see the hedge fund backing. You can see the fundamentals, value, growth, income, cash flow, Sortino, alpha. This is an example. Don't take this as read because this wouldn't fit into the conventional special situation on my Great Investment Program because it's overbought. It would fall into outside of the program. So I'm giving this as an example. Okay. You can see exactly in your portfolio. Okay, well, that's the downside risk. That's the upside reward. And the way you'd work out your risk management is that your money management. So to educate you on this, just so you can get an understanding of how hedge fund managers think. Your money management is, well, if it were to drop from 154 to say 128, okay, how much would you want to lose maximum? Of course, nothing, but maximum. You might say, well, actually, on that basis, for argument's sake, I don't want to lose more than £10,000, and that's a 10% drop. Therefore, you'd put 100,000 into it because the 10% drop would be 10% of 100 is 10,000. 10,000 is the most you want to lose. And similarly, if it was 1,000, then it'd be 10,000. So you can work out what your money management rule is. Alternatively, you might say, well, actually, what I'll do is I'll put half that in And until I've got some profits, then I'll add to the winners. It's a bit more convoluted, adding to winners, and a bit more technical and a bit more time consuming. But for the simple investor, they leave it for 12 months. They have a fixed stop loss. They walk away. They've got now value, growth, income, cash flow, Sortino, alpha. They've got risk to reward worked out. They've got risk management taken care of. They've got money management taken care of. And they know it's one of the leading hedge funds in the world, which has consistently generated returns. None of that guarantees future returns, but it certainly means all the hard work and the due diligence is done for you. And the reason it's taken so long to be able to offer this to my Great Investments Program people is, well, first of all, we were busy doing other things. We didn't have the team to take out the data to make it available. Even recording this video, you couldn't do 20 years ago. You had to record with all sorts of convoluted technical software and then encode it, then upload it, all of that nonsense. None of those things need to happen now. You click a button and then the rest of the team will just pop it up onto YouTube, TikTok, and elsewhere. So I wanted to give you a bit of an insight of what's coming on the program, and I'll drop some of these into webinars and so on, so keep an eye out and do like and follow and all those things as well. But like I say, very excited. Been waiting years to be able to give some of these insights to people, regular people that hedge funds already have insight to, so that you can piggyback on those or just learn, just for educational purposes, for informational purposes, not something that you might even take away. You might use it as a basis to do your own research, but really excited about it. And yeah, I thought I'd just share that with you. Thank you.